Hello, in today's training, it's a quick one to show you how to build a very robust trading strategy. It's a simple one that works off of the daily charts. If you haven't already seen the image or the picture of the equity curve that I put up, then I'm just going to quickly recreate it now on the board. So this is the makings of a chart of an equity graph. Up the y-axis, we got dollars made, how much your account's going to grow over time, and then literally down the bottom, this is time. Or in the image is actually trade number, but it just represents the time gone. And it starts from 2008. That's where I started developing the strategy, and somewhere about here is 2016. So from 2008 to 2016 is the data that I collected and I use to create the strategy that we're going to look at. And from 2016 onwards, here is October 18. Sorry if you can't see that. Present day, basically. So from 2016 through to October 18. Now this here is what we call out of sample. More about that in a minute. The equity graph, this is not going to be very accurate, but basically it's going to go, let's say it goes like that, and which is exactly what we want to see in our trading account. That's how our account would have grown had we traded this strategy over that period of time. Now here's where the important bit comes in. On the image, or I'll draw it on the chart now, you'll see a red line. Something like that. Now, everything this side of the red line, from 2008 to 2016, is what we call in sample. So I use that data. I had that data already to look at, and I was using that data to study the market and look at how it moved and develop the strategy. Then what I did, because I already had this data as well, because we're in October, I already had that data, and that data is what we call out of sample data, or OOS, so out of sample. So I wasn't using that data when I developed the strategy. And ideally, when we develop strategies, the perfect scenario is if, let's say, today's date was December 2016, and I used all the data, and that is what the strategy looked like, and I thought, yeah, great, looks perfect. What normally happens though, when a lot of people do that sort of thing, if you develop strategies the wrong way, typically you'll have this in your back test, and then your equity curve will go something like that, because they won't work in forward testing, in real-time trading. But as you can see with this strategy that I've just developed, that I'm going to show you, it carried on working almost exactly in line with the back test, which is exactly what we want to see. So what I love about doing these trainings is, I mean, this is quite basic. It runs off the daily charts. I should say, it's actually a collection of using 5 different Forex pairs, some of the majors. Interestingly, I didn't include, I was going to make 6, including dollar yen. When I was looking at the in-sample data, I wasn't happy with the results that I developed with dollar yen. So I thought, if I'm not happy in the in-sample, then the chances are it's not going to work out sample. So I just didn't even include it. So it's kept it very fair. So as I was saying, yeah, when you do these trainings, it's really good because sometimes you actually come up with stuff that you think, oh, actually, that's really good. I might actually use that myself, and probably will use a variation of this myself. So yeah, 5 Forex pairs this works on. So this is actually in a portfolio. It's not just a single pair. It's actually in a portfolio. That's why it looks particularly smooth, the equity graph, which is great, which is fine. So I expect you want to know how I developed it. I lost my whiteboard marker, or whiteboard rubber, should I say. So I was going to put something together. I wanted something very simple but robust, something that worked. And I was going to put together something like a moving average crossover or a channel breakout. But quite honestly, I was testing them and they just didn't work. They were that bad. I thought, yeah, let's keep it simple, keep it like everyone says, daily chart, moving average crossover, use it in a portfolio to smooth things out, but it just didn't work. Another reason why you probably shouldn't be using moving average crossovers or channel breakouts. Important thing to know now, what I'm going to show you is 90% of you might not even take any notice of this, because 90% of traders fail, unfortunately. So you have to look at what the 10% are doing. So if you're doing what everybody else is doing, then it's likely that you're not going to succeed yourself. If 90% of people fail, then you want to be copying the 10% that are doing something right. So 90% of people might be using moving average crossovers, for example, and that's why 90% of people aren't making money. But back to the strategy I'm going to show you. It's a method I learned, I didn't come up with myself, TDOM, or Trading Day of the Month. I learned it from Larry Williams. It's basically looking at a bias. It's looking at each individual market, so each forex pair. What I do, I run the data from 2008 through to 2016, the in-sample data, and I plot each trading day. So from 1 to 24, because there's up to 24 trading days in a month. And then I look at the gains or the losses made over that 8-9 year period. See if there's a bias, see if there's a huge, on trading day 15 that was a really strong up day. Then I can just literally say, okay, well, let's just trade from buy at the open, sell at the close, trading day 15. It's pretty simple. So what I do, for each of the 5 pairs or 6 pairs, didn't like the data for dollar yen, I'll run some data and look at the chart, and again up here you're going to have dollars or pound or yen, whatever the currency pair is, and along the bottom is TDOM from 1 to 24. So you've got 1 through to 24 each trading day of the month, and you're going to end up plotting the data, and you're going to end up with a chart that looks something like this, for example. This is ever so messy, but you get the idea. Each one there's going to be 24 of these bars for every day, and you can look at it and you think, okay, so look at this here, this period here, for example. Let's say that's trading day 15 and 16. So first idea would be literally say, okay, well, I want to buy on the open of trading day 15 and I want to sell on the close of trading day 16. And I've done this for each of the 5 pairs. I did long and short. So on this one, well, there's actually, looks like there's 2 good shorting opportunities from this day here through to this day here. So buy on the open of this day, sell on the close of that day, or sorry, short on the open of that day and cover that day. And again, might be another opportunity here. There's a couple of up days there, or there's 2 big down days there, short here, cover here. You get the idea. So I was looking at some strong biases, one for short, one for long. It doesn't have to be individual days. It can be, groups of days, or as long as they're kind of simultaneous, they run consecutive. And that's how I put the strategies together for each of the 5 pairs. Put them all together, then put the whole lot in a portfolio. The funny thing was, it took about an hour to do this. That's for all 5 pairs. It was really, really quick. Obviously, I'm using software. I've generated a code that will very quickly plot the trading days, the gains and the losses for the trading day of the month. But that's about it really. And look how the equity curve looks. It looks really, really good. It's something that I'm actually going to use. I'll probably tweak it and make it a little bit better, but essentially it really does work. And that's how a simple, robust algorithmic trading strategy can be developed. And again, you know, some of these stuff like the moving average crossovers and they can work, but generally they don't. You need to be doing what the 10% of people aren't doing. I bet probably 10% of you, only 10% of you might have heard of things like trading day of the month and biases, and that's what really works. So I hope this helps, and give me any comments or questions, and I'll see you in the next little training.